Ladies and gentlemen, dear hosts, dear colleagues, as a convinced and deep believing European citizen, I am deeply honored that I may serve as President of Insurance Europe for the next 3 years. You will understand that my very first action today is to express 2 words of thanks. First of all, knowing that he doesn't like it in front of such a big quorum, again to Sergio. All of us, Sergio, who have been attending yesterday evening's General Assembly, could feel the passion and the dedication which you expressed when you reflected the last incredible 7 years. Sergio was 7 years President of Insurance Europe, and what incredible achievements our industry in difficult times had in those 7 years. All of us know, and I repeat, who know you for many years, that everything what you do it by really your heart, you do it by all your means, all your efforts. You do not engage somewhere because it's required. And in connection with your deep knowledge about the European industry, not only the history, not only the present, but especially, and I'm going to tackle it later, what's ahead of us, all this together made your presidency so successful. And again, also this I'm going to repeat, what I like most, that as typical Middle European citizen, you always are able to open up doors if we think that for our industry, doors had been closed. You are able to build bridges because you like to communicate, you like to integrate, and for this, Sergio, I may especially thank you. Thank you for all. My second word of thanks, no big surprise, go to our incredible, charming hosts of the Spanish Insurance Association, sitting here in the first row of UNESPER, especially Pilar to you, Merenchu, to all your team. It's such an always amazing and beautiful city to which you invited us. Thank you for your support. Thank you for everything. Ladies and gentlemen, when I joined the industry, the insurance industry, and be aware this will be a very personal speech. I'm sorry about this, Michaela. But when I joined the industry 20 years ago, I wouldn't say that it was boring. I would say it was maybe more predictable, more foreseeable, a little bit dusty maybe here or there. Competition, of course, it was there, but we knew our competitors in all our markets. We knew how our customers, how our clients are behaving. Regulation, yes, of course, it was part of our life already in 1997, but maybe it was not as, challenging as today. Technological development, yes, was already at that time part of our life, but it was more linear going, maybe not as steep as we experience today. Frankly spoken, when I entered the industry 21 years ago, it was not a very sexy, not a very challenging industry. And if someone would have told me that 20 years later, I still would be in this industry, I would have said, never ever. Now, if I discuss with my children, I got 3 children between 25 years and 15 years. And the oldest was living 4 years here in Madrid, so I spent quite a bunch of time in this amazing city. But when I talk with them and their friends from all over the world about insurances, if I tell what kind of challenges we have to face, what big bunch of issues we have to tackle, they are surprised. And frankly spoken, for me, and this I do not say because I'm standing here, but for me, this is currently by far the most interesting and the most challenging industry in the world because we have to balance both worlds. And this is the red line of the next 23 minutes. I'm sorry for this time. Next year will be shorter. But the red line is that we have to balance both worlds. No question if you're working for associations. No question, no matter if you are policymakers. No matter if you're working for governments or, such as me, if you're working for operative insurance companies. The topic which we have is, on the one hand, we have to manage our existing insurance world. And on the other hand, we have to look into a future which all of us have no idea about how it's going to be. And we are asked, is expected from us, to find recipes, methods for both worlds. The strange thing is, our industry was and is so important for the development not only of the European economy, but for the development of the European society. So we really have, if you allow me to say this, full pockets. We have a lot of means, we have skills. We have been extremely successfully together in the past, in the last decades. We knew how to run our business, everything. But now something is rising where we exactly do not know how it will be. New competitors are there, new challenges are arising, and because of this, I want to give you in the next minutes 2 examples which I think are crucial for both worlds. First, 2 examples for our current business, our current world in which we are in, which we managed to run so successful, and afterwards 2 examples for the new world which is ahead of us. As already mentioned, the big theme, and this is the first example for the current world, I would not say old world, maybe more the classic world of insurance companies. The first example and the big theme of this conference, and I think Antonio is going to tackle it later on, is about underinsurance. Well, underinsurance is interesting because it describes the gap of protection which people should have and which in effect they have in their daily life. Big achievements have been done over the recent decades in our world. Societies have been developing. They are improving and have been improving their standards of living. Longevity is rising. Poverty is declining. But on the same hand, risks, which already had been there, either became bigger or new risks have been arising. Let me just mention 3. Pension, already mentioned by the Minister of Justice, cyber, and of course everything which got to do with NatCat. Let me please start with a few words on pension. Pension, of course, has 2 reasons. The reason why there is a pension gap. First, our demographic situation development, which is really alarming throughout whole Europe. This is an aging continent. If I look to our country, where I come from, and I will not make any kind of political statement right now, but if there would be no immigration in our country, our society, our demographic situation would even be much worse. So this, of course, has a huge impact on our pay-as-you-go pension system. The proportion between those people who are currently active, involved in the job, who have a job, who are working, and those who have been retired, those is changing in a very fast way. Where I come from Central Europe, those proportions always used to be 3-to-1. 3 people being active in their jobs versus 1 person having been retired. And as all of us know, this proportion is going to shift. Now currently in our markets, something like statistically 2.5, 2.4 towards 1 person. And if you believe all the scientists and all the research which we know, if nothing happens till the year 2060, 2070, it will have turned around. So we have to do something. The second reason why there is a pension gap is because people currently in all our markets, all our 35 markets, are not saving enough money for the pension. In the European Union, for instance, in 1 year, the gap amounts up to 2 trillion euro per year. 2 trillion euro. And worldwide, if you believe the figures which we have, the gap is incredible, $70 trillion, which is an amazing amount of money. So what to do? Should we complain? Should we say, oh, what a bad situation, what should we do? No, we have to do something. And the first what we have to do, and I'm absolutely convinced, and now here is the European citizen speaking, not the manager, is we have to take on our first duty to increase and to live our corporate social responsibility. Often we write in our annual reports about corporate social responsibility, but very often there's also a big difference between the walk and the talk. Now what do we have to do? Increasing financial literacy, increasing the awareness about the necessity of financial education. All of us in this room are in charge. Policymakers, associations, insurance companies, regulators. It's easy to do. All of us can do it on a daily basis. cooperation with schools, with universities, with ministers. Many steps are required. This is not something where you will feel changes tomorrow. Maybe it's something for the next generation, but this is something which doesn't cost money. It just costs our all personal involvement. Second reason, what we can do, we can support, I'm now friendly, we can support our governments in being really clear about the financial condition of the states in which we're living. Just talking about my country, sometimes we have the feeling everything is okay, guys, don't worry, pensions are saved, everything is stable. This is just simply not true. It's not working. So we have not to attack the governments, but to look and to search the dialogue, ask them for cooperation, give them information, materials, and be a partner in raising the awareness and be very clear about the concrete situation. Third, last but not least, and this is a consequence of my previous point, which I just mentioned, of course, we must support policymakers in finding and deciding about the right incentive schemes for people who should save money for the future. If we do not do, ladies and gentlemen, we put really an incredible burden to the next and the over-next generation, and these are our children and our grandchildren. At European level, because I was just touching the national levels, but at pan-European level, of course, the pension challenge has resulted already in an increased focus, which we highly appreciate. A very good example is the European Commission's proposal for a pan-European pension product, PEP. All of us are aware about this, we'll come to it a little bit later. But to achieve its aim, this PEP must be a relevant product which really predictable allows our clients, our customers to save for the future. Second field of underinsurance I would like to tackle after pension is about NatCat. This is amazing. Just in the last year, in 2017, the overall impact, the negative impact of NatCat worldwide was amounting up to $300 billion. $300 billion. And imagine just 1/3 of this was protected by insurers. This means that 200 billion, a bill of $200 billion had to be covered either by states, by corporates, or by individuals. And the strange thing, Antonio, we discussed before about your markets in which MAPFRE is in Latin America, the strange thing, this is concerning both worlds, mature markets and non-mature, emerging markets. Of course, as all of us know, the effects in the unmature, in the emerging markets are much stronger. Why? It's simple, because underprotection is higher due to the fact that the insurance penetration is lower, so we feel the impact more strongly, and most of all, we feel it on a more longer period of time. But also mature markets are somehow always affected by NatCats. If you just think about the earthquakes, which we experience frequently, for instance, in Italy, or hurricanes, which we had to experience in the US always over the recent years. So while us insurers, of course, have to play a role, policymakers, and here I'm really clear and outspoken about, must take a leading role as far as NatCat is concerned. This means, and we have to address it, is our responsibility as insurance companies to really limit climate change. The COP21 agreement was a very good and necessary step into the right direction, and the European Commission's action plan to encourage a greater and faster transition towards sustainable finance is another one. But here again, I want to raise my voice as a European citizen. I mentioned a few minutes ago that I have 3 children. The most frequently asked question from their side is, what does our generation, as we are sitting in this room, and maybe there are 2 generations sitting in this room, I do not know exactly, but what do we do currently? And we have huge possibility because of the importance of the insurance industry. What do we do to somehow manage climate change? Or will we be those generations who, like in 30, 40 years, will be asked, where, guys, have you all been in the years 2010 till 2020? Cyber risk, the third topic of underinsurance. Cyber risk for me personally is somehow the strange animal in the room. I cannot grab it. It's somewhere, it's quite dark in the back of the room, but even it's like a similar comparison. I cannot see exactly what cyber is doing. And I think this is the feeling which all of us have. we always have the feeling, at least me, and I don't like it, to be always one step behind. And this is not good for our industry. If we just believe recent reports, a global cyber attack, if really there would be one time a kind of global coordinated cyber attack, this would cost us at least in one effect $50 billion. $50 billion. But this is just the very first step. Unlike natural catastrophes, cyber attacks, cyber risk, has no geographical boundaries. There is no limit. It can be everywhere, in Madrid, in Rome, in the USA, in Asia, South Africa, everywhere in this world. And it would spread over incredibly quickly. So if, therefore, and this is the topic, if therefore we want to do something, we have to answer questions of accumulation and aggregation. This is maybe one reason why for us insurance companies, and I'm talking now from my operative function, currently it is quite difficult to calculate and to price in a proper way cyber risks. Another key factor limiting currently the development of cyber insurance solution is the lack of data which are available for us insurance companies. This makes, again, our industry, it makes it really very difficult, nearly impossible to find a proper and an adjust pricing of this risk. On the other hand, we get a chance now, an opportunity. I want to talk about GDPR, because GDPR, as we know, obliges companies to notify their national authority about data breaches. So if policymakers throughout Europe really want to shift the risk away, as far as cyber is concerned, shift away the risk from society, then they should make information on the nature of cyber attacks available to us insurance companies. Of course, this is clear on an aggregate-based and on an anonymized basis as well. This was now 3 examples when we talk about underinsurance: cyber, NatCat, and pension. The second field I want to touch, if we talk about the current challenges of the world, if we are living in, and I'm sorry about this, but I have to take it because I know you expect it from me, is everything which is concerned to regulation. Our friends from European institutions, policymakers, governments will be surprised, but I want to say it really clearly. Not only me personally, but Insurance Europe, we really love regulation. We really love it. We love it because we want our industry to be transparent, to be clear, to have clear rules. We want to have transparency. All our stakeholders, our clients, our customers, policymakers, investors, business partners, they have to know what kind of business we are in and how are the companies doing. And also a clear message to all of you who are in this room and who work daily to develop such rules. We know what kind of difficult job you have. It's really difficult because so many risks, so many issues are arising. So we want to support you this. We don't ask you for new rules, please, no rules, but just let us discuss about the way how those rules are developed and the way how those rules are implemented. In this year only, and all of us know, in this year only, us, my insurance companies, your member firms have to implement PRIPS, we have to implement IDD, and by the way, till end of this week, basically till tomorrow, we have to implement GDPR. The objectives of all those regulations is clear, is well understood, it's important. It's about delivering more transparency to customers, to consumers, to protect them, and to reinforce competition. This is fine. The topic just is that currently a few rules must be applied, new rules, in an increasingly complex sales environment. This means that they frequently apply currently in combination or on top of already existing rules. Currently, we have, and this is an example from last week or from our today's world, we have six different European directives applying on one sales process, In addition, we have the level 2 measures, we have level 3 measures, and in some of our countries, even in addition, national measures. And frankly spoken, now we can say, okay, fine guys, you have to deal with it. is really complex, and it's especially a huge burden for our customer. This is the topic. So why it is like this? If I would have such a kind of process in my company, if I would observe this, I would say something is going wrong in the way how to develop it out. And you know what is wrong? It's quite easy. It's like an old sickness, an old disease of insurance industry. We are developing those rules not in a congruent way, but we develop it in a kind of silo thinking, in a parallel way, with very good means, with very good purpose. So the idea behind is absolutely fine, but the result is for our customer, for the end user, it's really a disaster. So regulation does not always reflect customer demands, is what I say, because it is not fit for a digital future. People increasingly buy insurances or inform themselves online. The new rules which we have to fulfill asks for a lot of paper communication. And this, frankly spoken, just doesn't work, because it does not only confuse the customer, it does not only annoy the customer. I have here, as a European citizen, another issue. I was talking to you 5 minutes ago about climate change. I was talking about our corporate social responsibility. And here, our industry has to produce billions of tons of paper each year. And I really may ask you, what exactly for? Third, and this is a time frame now. As all of us know, and it's not a complaint, I just want to make it very clear. Our industry has not enough time to implement those new rules. For example, on PRIPS, and please excuse, I want to be really clear and explicit about it and really give you the correct data. Please apologize this. On PRIPS, we were given the level 2 measures 3.5 months after the initial implementation date. This led the Commission to postpone the application date by 1 year, leaving us with 8.5 months of implementation, at least in theory. In fact, some of the level 3 measures were published just a few weeks before the new application date. Topic 1. Topic 2, GDPR. We were only given the details of how to implement some of its key provisions a few weeks ago, even though, as we know, Friday is tomorrow. A few weeks just is not enough, it's impossible. Point number 3, IDD. Originally, basically, we had something like 2 months to comply with the detailed measures. 2 months. 2 months instead of 2 years. Thankfully, the EU institutions then postponed the implementation date to make it more workable. And again, dear colleagues from the institutions, this does not mean that Insurance Europe is asking for more regulation. More regulation does not necessarily mean better regulation. What I'm talking about is just, please, let us jointly rethink the way of developing and rethink the way of implementation. In short, to ensure regulation really is fit for purpose. The colleagues, 2 examples now from the old world. The first was about insurance, and second, a more dry one, more technical one, sorry for this again, about regulation. Now 2 examples for the future, and please allow me to say it, future has started yesterday. It's not something which starts now or tomorrow or next week. We are already in the middle of the future. And just now, it's really crucial, this year, this month, these weeks, what kind of decision jointly are we taking? First, again, a dry topic, apologize again, solvency, also the big animal in the room, Solvency II. Our industry, no question, continues to strongly support a rigorous risk-based approach. But there are a few things where we should have a joint special focus on, mainly, of course, and this is no big surprise for all of us, on the long-term aspect of our business. This is crucial. Those improvements are really needed to avoid excessive capital burdening our existing long-term business. These improvements are also needed to allow us insurers to develop new and innovative products that respond to the changing needs of our customers. For example, fitting and an appropriate framework for the proposed pan-European pension, which I mentioned a few minutes ago, together with improvements of Solvency II, could allow us to offer really new, innovative, and guaranteed, these are our nature, guaranteed long-term saving products to a new generation of customers. If you allow me one step aside, as far as I can see at least, in other jurisdictions, supervisors appear, at least they appear, to take a great deal of care to avoid creating disincentives to us insurers making long-term investments. But here in Europe, Solvency II treats us as if we were only short-term investors. This is just not true. This is not reflecting the true nature of our business and our responsibility towards society and towards the people, citizens of this continent. And this significantly, of course, increases the costs of long-term insurance products for absolutely no good reason. Combined with the current challenging economic environment, which we're all facing, the lowest interest environment, Solvency II has been pushing insurers completely currently away from offering long-term guaranteed products and solutions. As EIOPA has already highlighted, this means risk has been shifted away from us to consumers. And now I really may ask you, in the year 2018 in Europe, is this really our intention to shift risks away to insurers, to customers? Is this really what we want to have? I don't think so. The European Commission, and I really explicitly want to address it, the European Commission has made a welcome start to addressing the problem with improvements under the Capital Markets Union project, but this is just the beginning. We very carefully look forward to the Commission making good use of the upcoming reviews of Solvency II to fully tackle this issue. Now, closing Solvency II, of course, you expected from me, I want to just give one sentence to IFRS 9 and IFRS 17, because it's also always something approaching us. We must ensure that international financial reporting standards, 17 and 9, correctly reflect our business model. This is crucial for us. That way, both prudential and accounting frameworks will measure our assets, our liabilities, and our risks in the proper and right way. Then it could work. My last topic for today, and this is the second example, more or less for the future, the world of insurance for tomorrow. But again, here also we are in the middle of the future, and you expect it from me. It's about big data and customer protection. This is a huge topic. Ladies and gentlemen, to be very clear here again, Insurance Europe, our member associations, our member firms are not afraid at all from a fair competition. We are not afraid of a competition. We are not afraid of insurtechs. We are not afraid of fintechs. We are even not afraid of tech platforms or tech giants. But the only thing what we ask for is that this competition must be conducted on an absolute, clear, level playing field, and the result must be, without any doubt, only a better outcome for our customers and our clients. This is a demand which we have, and this is what we are going to fight for. The golden rule is, it's the customer. It's our customer who owns the data and who decides about the data. We, as insurance companies, we are just the administrator. For this reason, of course, Insurance Europe strongly supports the Data for Drivers initiative, which calls on the European Union to ensure that drivers remain in control of their vehicle data. If you allow me this very personal comment, it should be our drivers, our customers, who stay in the driver's seat, and not the automotive companies who produce the driver's seat. A little bit of difference. So, just 3 short ideas how this can happen. First, we must ensure that our customers can access the benefits of the data economy, such as innovation, variety, and fair choice. Therefore, policymakers must not impose rules that needlessly undermine the enormous potential unleashed by digitalization. The first topic. The second topic, let us take care of platforms. Let us take care of search engines, because they do not necessarily deliver a true and objective result. This is dangerous. As such, we generally welcome the European Commission's new proposal for better monitoring of these kinds of online platforms. And point number 3, any new regulation, and I just mentioned it before, should be technology neutral and should be somehow activity-based. This means no uneven playing field and high consumer protection standards in the fintechs and in the insurtechs environment. In other words, same activities, same rules. It was mentioned by the minister, dear colleagues, ladies and gentlemen, just a few minutes before, and I'm coming to the end of my speech. It was mentioned that our association, that Insurance Europe, is representing nearly 1 million people working for us in 35 countries. In 2017, the previous years, paying claims of something of 960 billion euro, benefits and claims. So, incredible strong figures. What an opportunity. But for this, ladies and gentlemen, for keeping our importance high and be a relevant, dominant player on behalf of our customers, on behalf of our society, we have to keep to talk with one voice in challenging times like these. One voice. Why is this so important? And this is a very personal comment at the end of my speech. The real competition, dear colleagues, is not among your member firms. The real competition in future is not among our member countries. The real competition, which all of us in this room, all traditional insurance companies are facing, is the competition with tech giants and platforms, predominantly coming outside of Europe. So should we then be afraid? Should we say, oh, they are so big, they're so impressive, they have so many customer interfaces, it's over? Not at all. As I mentioned 20 minutes ago, we have been that successfully running our businesses in the past. This gives us a lot of strengths, a lot of positive thinking for the future. But we only will manage to overcome those challenges in the same good way as we did in the past if we stick together and if we as industry speak with one voice. I'm very delighted about our future cooperation. Thank you for your trust, and thank you most of all for not sleeping, as far as I could see. And now, dear colleagues, I'm delighted to introduce Burkhard Balz to you. Whole world knows him, member of the European Parliament. Herr Balz, the floor is yours. Thank you.